Please sit down. Take your seats. Good morning. I could not hear your good morning. Yes, let's start the day well. So let me thank the organizers for putting together this program. It's an important one. It's good we engage in the debates. And for us at the Central Bank, we encourage these. Yesterday, we had a good meeting with the fintechs that are involved in the remittance business. And I believe that that approach is more efficient. We listen, we hear you, and together we agree on the reforms. It should not be top down all the time, but it should be consultative. Let me assure you, this is the approach we are going to use going forward. So more of these debates. Anytime you put it together, we are happy to be part. Now, when I got in here this morning, somebody asked me, Mr. Governor, I want to ask you what you have been doing since you came in. And I said, yes, I welcome that very much. It's about 5 months now in the job. Remember, we came in at a time when the IMF program was actually, off track, virtually, derailed. Inflation was very high, if you remember, over 24%. The exchange rate was out of control. There was so much uncertainty. As a matter of fact, when we had the first meetings with the IMF team, there was a lot of pessimism. There was thinking about, should we just cancel the program and start all over again? But we decided to take the bull by the horns. And I believe that in the last 5 months, we've taken some very, very major decisions. Decisions that underscore the progress that we are seeing now. And so therefore, there should be no doubt about sustainability. Somebody asked me, do you think you can sustain the stability of the exchange rate? And I said, have you read the background data? These things should be informed by the evidence. Everything is out there in our statements. If you go to after MPC, we'll put out lots of data. But it appears in Ghana, the way we form our expectations when it comes to the exchange rate is to listen to the Zamana man, is to listen to the Alaji in the corner. And I think that's where the problem is. If you have a country whose trade surplus has doubled compared to last year, if you have a country whose current account has increased from a mere $66 million last year to over $2 billion in the first quarter of this year, why are you surprised when the exchange rate is showing stability? And so my point is, please look at the data, the media. Focus on the data. When you are forming your projections about the exchange rate or whatever variable, look at the data. It's all there. But you notice that in Ghana, we say the exchange rate is going down, and so it keeps going. It keeps going. You notice that trend? And I kept saying that no. Allow the exchange rate to move. Today, it may rise. Tomorrow, it may come down. Because it's an endogenous variable. When it moves, it's actually protecting the country against external shocks. And so it must move. But it appears it's all about what somebody thinks, and then we all go in that direction. So tomorrow, the moment the Zamra man says, hey, the city will start appreciating again, then everybody starts liquidating. If there's anything I want you to remember this morning, is that tell people that these things are macroeconomic variables. They are driven by macroeconomic factors. So just look at the data. And we churn out a lot of this data. We update it all the time. Use that to form your projections about the exchange rate. And if you do that, I believe there will be no doubt in your minds. I have some prepared speech here, so I'm going to read through it. I'll give you some figures to underscore what I'm saying. But again, I cannot emphasize it enough. The way we are forming expectations in this country is not the best. It's all about what somebody thinks, what somebody says. It's never about what does the data say. And that's what I'm saying. If a country's external sector is so strong, why do you have doubt about the exchange rate? Right? The level of international reserves is over 11 billion. Right? Over 11 billion. It's now at 4.8 months of imports cover. And the press is arguing about how much intervention was done in the first quarter. And I'm like, they don't have anything to talk about? Talk about what the figure is now. You have over 11 billion, dollars. Compare that to what it used to be. 4.8 months of imports cover is no joke. Under the fund program, we were expected to build up international reserves to the tune of around 400 million by the end of June, for the first half of the year, end of June. Under the program, we were required to build up around 400 million. But do you know how much we built up in that first half? 1.6 billion. So why don't we talk about that? But rather talking about, did we pump 1.4 billion into the markets? And I'm like, please, can we raise the argument? Can we raise the debate? It's about what it is now. And talking about our interventions, many people don't understand what we do. We ensure that we are not using our reserves, right, to support the market or whatever it is. But about the Gold for Reserves program. Formerly, the gold business, for example, those export revenues used to accrue to commercial banks, right? But under the gold board arrangement currently, those flows are accruing to the central bank. So it makes sense to support the markets. Where is the sin in this? It's just we have to support the market because it's as though we've taken over flows that were going to the markets anyway. And so that is what we do. So my point is, look at the data, please. Read about our external sector performance. Look at projections going forward. And that should inform whether it will be sustainable or not. So permit me to quickly run through my prepared speech. Unfortunately, I'll have to leave by 15 minutes to 9. I have to be out of here. But let me introduce some of my advisors who are here with me. They will stay with you. They will join the debate. They will join the conversation, and they'll bring back a report for me later. Dr. Kwachi is one of our advisors. Dr. Kwachi, you want to wave? Please acknowledge him. He is helping us on monetary policy. And then we have a member of the Monetary Policy Committee, Professor Texan, seated right by his side. We also have Mr. Belnier. Some of you who have served in the industry would know him. Mr. Belnier used to be the head of banking supervision for many years. He paid his dues, but we decided to call him to come and, assist on issues about financial stability. Gentlemen, thank you for coming. So, distinguished colleagues, Managing Director of Graphic Communications Group, Chief Executive of Stanbic Bank Ghana, invited guests, ladies and gentlemen. I will begin by commending the graphic business and Stanbic Bank Ghana for yet another timely and thought-provoking edition of this flagship breakfast series. This platform has become a vital part of our national economic discourse, where ideas are tested, where assumptions are challenged, and where the policy-business interface is strengthened in the public interest. So your theme for today, that is sustaining forex gains, business economic impact. This theme could not be more relevant. The theme reflects not only the macroeconomic transformation that is underway in Ghana, but also the central question on many minds. And the question is, can the recent strength of the cedi be sustained, and how it would be translated into meaningful business outcome? So again, as I said earlier, it's not about the strength of the cedi, because it cuts both ways. Our objective is to ensure that in real terms, the cedi is not misaligned. So whether it is coming down or going up, we monitor what we call the real effective exchange rate. That is what matters. And at every MPC, the graph is shown. We, analyze it, we scrutinize it to make sure that we are comfortable about the positioning of the exchange rate. So we don't just let it go where it's going. We are watching something behind it. So, colleagues, the Ghanaian economy has over the last 3 years endured extraordinary shocks ranging from the domestic debt exchange program, as you know, all the way to global financial tightening and fiscal slippages driven by excessive borrowing. These events tested the very fabric of our macroeconomic architecture. As you remember, inflation soared, the currency weakened sharply, and public confidence wavered. But since we came, and through decisive reforms spanning fiscal, monetary, and institutional, we have reached a critical turning point. Today, the cedi has not only stabilized, and I did not say strengthened, stabilized. It has strengthened significantly, supported by robust external buffers, prudent monetary policy, coordinated fiscal consolidation, and renewed investor confidence. We now have to move from stabilization to sustainability, and from headline gains to real sector benefits. And that is the heart of our conversation this morning. So let me begin by outlining the facts. And as I mentioned, this type of conversations should be based on the facts. The local currency has appreciated by over 42% year to date, that is as at end of June 2025, and has reversed nearly all the losses that were incurred in 2022 and 2023. Our gross international reserves now stands at $11.1 billion. And as I said, accounting for about 4.8 months of imports cover, which is up from 8.98 billion at the end of last year. We recorded a trade surplus of 4.14 billion in the first 4 months of 2025, with exports growing by over 60%, mainly from gold, cocoa, and oil. And I must admit, given the vulnerabilities that arise when your economy is virtually based on the exports of raw commodities, then you have to take measures to protect against the shocks that could arise. And let me say that we are currently working on a price hedging program, such that even if gold prices ultimately suddenly fall, we are able to limit the consequences therefore. Now, the current account surplus improved significantly to 2.12 billion as at the end of the first quarter of this year, and you can compare that to a mere 66 million during the same period last year. On remittances, Inflows remain resilient, even though we have noticed some decline from April, and the Ghana's IMF-supported program has passed successive reviews. As you are aware, the fourth review was just concluded. We have had our sovereign credit rating upgraded, which was very welcome news. We are sure that before the end of the year, there will be further upgrades, and ultimately, we should be ready to reopen to the international capital markets. Now, these outcomes represent more than just statistical improvement. They are a restoration of macroeconomic credibility, the kind that markets, that investors, and that citizens respond to with confidence. So, how did we get here? At the Bank of Ghana, we maintain a firm disinflation stance since we came in, raising and holding the monetary policy rate at 28%. We conducted active open market operations to absorb excess liquidity, and we enforced discipline in the foreign exchange market through structured FX options and forward guidance. One of the things we have introduced is greater transparency to what we do. And so for the past MPC sessions, we've welcomed a number of stakeholders from out there who want to observe what we do. And I must admit, what we do is highly technical. It's much more than a lot of people think of. And I remember the last MPC, we invited the president of GUTA. Did I hear he's here somewhere? I'm told he's here in the hall. He was there with us. He went through the 2 days of deliberations and arguments and all the presentations. And then for the first time, he understood that even if we say inflation targeting, it doesn't mean we do not analyze real sector data. The name inflation targeting is actually a misnomer. It doesn't adequately capture what is done under the framework. We analyze all sorts of data, all sorts of data. And if he's here, he'll bear testimony. At the end of the 2 days, we asked him to make a comment. And he said he never knew this was what, took place inside our meetings. So we are welcoming more groups. If you want to attend, if you want to observe, you can attend. You can ask questions. You participate. The only thing you don't participate in is when the MPC members are voting to make a decision. That's when we ask you to leave the room. We are transparent. We want to enhance the efficiency of our monetary policy, and we welcome all manner of stakeholders. This time, I believe the Association of Ghana Industries are going to be part, as well as several others who have written to us. NDPC is going to be part. And so, if you want to be part, on condition you won't be covering the arguments real time, you are welcome to just sit in for 2 days and observe. Okay, so what we are witnessing so far is the power of synchronized policy execution, where the central bank's inflation targeting mandate and the government's expenditure rationalization converge to restore credibility, stabilize expectations, and anchor the cedi. So therefore, the result, a steady return of portfolio inflows, and we are observing that, a revival of domestic confidence in cedi-denominated assets, and we have officials from the Ghana Stock Exchange here to bear testimony, and we have an uplift in a number of real sector measures, the Purchasing Managers Index, our Composite Index of Economic Activity. They all bear witness to the fact that the real sector is equally recovering. Now, while the cedi's resurgence is commendable, it must not lull us into complacency. Sustaining forex gains is a far more complex task than achieving them. It requires anticipating headwinds, managing contradictions, and addressing deeply embedded structural challenges. So we know that there are risks. First, the risk of volatility remains real and persistent. Our current account and reserve strength are still largely dependent on a few commodity exports, as I mentioned, talking about gold, cocoa, and oil. These sectors are highly vulnerable to price fluctuations driven by factors beyond our control. For example, gold prices, which have significantly boosted our export earnings, are currently above 3,200 ounce, influenced dollars per ounce. And these are influenced by geopolitical uncertainty, including the recent Iran-Israel conflict. But while beneficial for now, colleagues, a future correction in prices could quickly narrow our trade surplus. Moreover, Ghana's import profile is heavily skewed towards energy, capital goods, and essential commodities. And this creates seasonal forex demand spikes, particularly in the second half of the year. So without diversification, even small shifts in global sentiment or commodity cycles can trigger renewed pressure on the cedi. And as I mentioned, we are entering into a hedging program to be able to stem some of these risks that may arise in the future. The second challenge, colleagues, is behavioral, and I spoke about that in my introductory remarks. Colleagues, we are still grappling with a deep-rooted culture of dollarization. Too many businesses continue to price in dollars, in real estate, education, and luxury retail, despite transacting entirely within Ghana. And this practice not only violates legal tender laws, but also undermines confidence in the cedi. Even more concerning, colleagues, is the mismatch between forex inflows and domestic reinvestment. While export receipts have risen, a significant portion is either held offshore and not channeled back into productive activity at home. So Ghana's formal savings rate remains low, and our export value retention, particularly among SMEs and in the informal sector, is far below potential. Then there is the policy dilemma. As I mentioned, a strong currency improves terms of trade and helps lower inflation. But prolonged appreciation can hurt export competitiveness, make Ghanaian goods less attractive abroad, and slow the industrial recovery. And it's for that reason that we monitor movements in the real effective exchange rate, not the nominal exchange rate. The Bank of Ghana must therefore walk a delicate line, like we do, managing forex strength without over-tightening liquidity, which could suppress private sector credit and stifle the very growth we seek to encourage. This balance is not static. It requires constant recalibration based on evolving data and market behavior. And for us, we monitor these on a weekly basis. Monday afternoons, we have an economic policy coordination meeting where we assemble all the data. So yesterday in the afternoon, we had that. And that's how come on a weekly basis, we can tell you what is happening in the economy. So it's all about the data. It's evidence-based. So let's all base our projections, our perceptions, whatever it is, our doubts and our fears, let it be based on the data. What does the data say? Not what the Alaji says, not what the Zamanama man says, please. So, colleagues, it's not enough to stabilize the cedi. The real measure of success is whether we can translate forex stability into broad-based economic transformation, one that empowers businesses, creates jobs, and lifts the productive capacity of the nation. So let me offer 4 priority areas where the conversion must occur. First one is to strengthen FX retention and circularity. We must increase domestic retention and circulation of forex earnings, and we are taking steps in that regard to ensure it. Exporters should be encouraged, not coerced, to reinvest their earnings locally. Tax incentives, preferential credit access, and public procurement schemes can be linked to evidence of local reinvestment. We must also improve the ability of formal SMEs to earn and retain forex through digital channels. This includes fintech-driven cross-border platforms, digital trade finance tools, and transparent export documentation systems. If we empower SMEs to participate directly in international trade, we broaden the forex base and we reduce concentration risk. Second, Ghana must move beyond raw commodity dependence, as I mentioned. In cocoa, as we all know, it is time to scale value-added processing, the branding, and retail export chains. In gold, we must accelerate efforts towards in-country refining and bullion storage. And steps are on the way to push that agenda also. And in oil and gas, investment in the petrochemical industry is now a clear imperative. So beyond commodities, we must invest in non-traditional and services exports. Ghana has an untapped edge in information technology, in digital finance, in education services, in architecture, and in our creative industries. Lots of potential abound. With the right regulatory support and market access frameworks, colleagues, these sectors can generate stable forex, create high-quality jobs, and diversify our revenue streams. Third is to enhance FX market efficiency. We must build a more efficient, transparent, and liquid FX market. And in this direction, the Bank of Ghana will continue expanding its FX forward auctions while encouraging the development of basic derivatives markets, markets that allow businesses to hedge currency risk. We encourage financial institutions and corporates to explore hedging instruments such as swaps and forwards to better manage forex exposure than we are doing now. These tools are not only risk mitigators, they deepen market sophistication and they reduce panic-driven volatility. And finally, we must actively protect the cedi's role in the domestic economy. In other words, we must support cedi dominance and de-dollarization. This involves enforcing our legal tender laws, and this will be stepped up by us very soon, especially in sectors where FX pricing has become normalized. That should not be normality at all. The ongoing rollout of the ECD will be integrated with retail payment ecosystems to ensure that even in the digital economy, the cedi remains central. This effort started a couple of years ago. We intend to push forward the agenda. A number of pilots will be conducted, and when ready, we will announce to the nation in terms of our forward march. Then we are also finalizing a regulatory framework for virtual asset service providers, or what's known as the VASPs. This will bring cryptocurrency exchanges and digital asset platforms under formal oversight, aligning them with AML CFT rules and ensuring that digital innovation supports rather than undermines FX control and monetary stability. It is a fact, colleagues, that crypto is a big thing in Ghana. We can pretend, we can look the other way, but reality is that it's impacting. And so therefore, as the regulator And together with other regulators, such as the Securities and Exchange Commission, GRA, and others, we are joining efforts to engage in regulating that activity and to ensure that the benefits accrue to us while minimizing the risks. A friend of mine said, crypto is like the air we breathe. You can't stop it. It goes everywhere. It takes place everywhere. And so all you have to do is to develop the systems to be able to minimize the risks and allow these to play out. The Bank of Ghana has played its part, colleagues, as I have outlined, and will continue to do so through sound policy, through credible regulation, and through institutional discipline. But sustaining forex stability cannot be achieved by the central bank alone. It must be embedded in how businesses operate, how businesses plan, and how businesses engage the financial system. We encourage export-oriented businesses to reinvest their proceeds locally, not just as a patriotic gesture, but as a long-term strategy for profitability and for resilience. Firms that invoice in cedis or adopt hedged forex positions are not only reducing their exposure to volatility, they are strengthening the ecosystem within which they operate. And such firms deserve recognition and support through access to tailored credit products, FX liquidity facilities, and procurement incentives where possible. Let me be clear, colleagues. The more value we keep within Ghana, the stronger the cedi becomes. And the more sustainable our macroeconomic trajectory, therefore. And so we want to encourage everyone. Let us embrace the local currency. If you go to South Africa, you have no choice but to use what? The rand. You go to Kenya, you use the shilling. We call it an endogenous variable. It is because everybody is running away from it. Everybody is taking, investment decisions to avoid the cedi, and therefore the cedi will be weak. But if we re-engineer our thoughts, and if we recalibrate how we form our projections about the cedi, I believe the cedi can be as good as any other currency out there. For us at the Central Bank, we are celebrating the 60th anniversary of the cedi. There's going to be a launch on the 8th of August, and let me take the opportunity to invite all of you. It will take place at the International Conference Center. His Excellency the President will chair that event. Let's make a statement. Let's make a mark for once. When the first president of Ghana decided to adopt that currency 60 years ago, precisely on the 19th of July, 1965, what he did was right. He meant well. And so we invite all of you to join us. Let's make that bold statement once again. It's our local currency. It is the only legal tender. And so let's uphold that. So finally, as I said, we invite you to partner with the Bank of Ghana, not only as a regulator, but as a co-architect of Ghana's monetary future. We want you to share market intelligence that can improve our forward guidance and FX caution design. I was telling the group we met yesterday that my phone numbers are always open. Everybody has my phone number. If for any reason you need to whisper anything you observe, you want to relay to me, just send me a WhatsApp. I'll pick it up quickly. Because there are things going on and I can't understand. For example, the counterfeiting of our cedi notes. Apparently, there are foreigners who are doing this, and they are doing it among our own business people. They know them. And yet, people just look away. And I can't imagine how we tolerate that. So if you observe any such practices, please pass on the information and quickly, we will engage. We want you to collaborate with us in building fintech innovations that support cedi-denominated payments, credit access, and cross-border transactions. And we want you to join us in piloting and scaling initiatives, talking about the ECD, which has the potential to transform our payments infrastructure, etc. So together, we can shift from a reactive posture to a proactive partnership where businesses help shape the very environment they operate in. So let me conclude. So in conclusion, allow me to once again commend the Graphic Communications Group as well as the Stanbic Bank Ghana for convening this important forum. Your leadership in shaping national conversations like these is vital to the health of our economy and the quality of our policy making. As we engage in today's panel discussions, I want to encourage all of you to be open, speak up. Open contributions and bold ideas should come. And as I mentioned, my colleagues are here. They will pick up, they will sample all your ideas, and we will work with them. Let us use this moment to forge a collective strategy for Ghana's foreign exchange future. A future that is built on credibility, built on capacity, and built on courage. So, colleagues, the cedi is indeed rising. Let us ensure that our country, Ghana, rises with it. I thank you for your attention. Thank you.
We can definitely do better. Another round of applause for the Governor of the Bank of Ghana. Now, this was supposed to be, we can please be seated. It was supposed to be the chairman's remarks, but the governor took advantage, of course, to explain things to us, and we're glad that you did. I like the fact that you focus on the fact that the more value we keep in Ghana, the more sustainable the cedi becomes. It's something all of us must think about. And also the fact that the cedi is the only legal tender in this country. I've always asked myself, if you go to Nigeria, you can't be pricing things in dollars. But over here, everything dollars. And sometimes you wonder, even within the informal sector, they're having a conversation with you about dollars. So it's important that you've made that point. We've also noted, the 4 points that you talk about, forex retention in Ghana, which you say they must be encouraged. You've also talked about the fact that Ghana must go beyond raw commodity dependence. You've talked about enhancing the FX market efficiency and actively protect the role of the cedi in the domestic economy. Thank you very much, which means we can get into the panel discussion now. I am happy that the president of GUTA is here, and he had his time at the MPC meeting. But Dr. Asiama, now that you've indicated that we can also take part, as head of Joy Business, I say that Joy Business would want to take part in the next meeting. We also want to experience everything so we can better inform everybody. And I'm happy that you've nodded. So the team will take notice. Professor Texing and the others will be there with you. Of course, we don't have voting rights, but thank you. So let's start with the panel introduction now. And the president of GUTA, Joseph Obeng, is here with us. Please join us here. I'd like to know what your experiences were when you got there. Thank you very much. Let's welcome him. Professor Ijapoma Jeke Dako is at the University of Ghana Business School. Please join us here. Thank you very much. Efwa Buli is head Global Markets Stanbic Bank. Please join us, Efwa. And Vish Ashiagbo, who is Country Senior Partner, PwC. Please join us here, Vish. Okay, let's get the microphones here so that we can get into the conversation. Now, the other thing is that, the governor indicated he was going to be here. He was going to leave by 9:15. It's past 9:20. We liked everything that you said, But what that also means is that we have less than 30 minutes to wrap up everything. Maybe 30 to 35 minutes. And because you've always accused me of not giving you enough chance to take part in the conversation, we're going to do things this way. I would ask my panelists what their views are on the theme, and then we'll open up the conversation for all of us to have, a conversation. So it's not going to be me asking all the questions. I'd ask a question or two, and then I'd allow you to ask questions and contribute. That's how we're going to do it. So let me start off with you, Joseph Obing of Guta, because you were at the MPC. I'm told that when you went, you realized that things are not as easy as they are. Tell me what you experienced, and then we'll continue from there.
Yes. So you realize that normally we will accuse Bank of Ghana or we attack them that why is the monetary policy rate not coming down to bring the interest rate down for us. So we have talked about it because the last one, they increased the monetary policy rate, and we said, why? So they probably thought it wise to invite me there, and what I saw, what goes into bringing about the monetary policy rate is something that we all need to be there. You see that inflation has come down as low as about 13.5. I would have come on air to say that if inflation is down, then it should pull along the interest rate, but I haven't done that because of what I saw. So I thank Governor for bringing out this transparency, bringing all the stakeholders into play. He's very serious in ensuring that we have stability in the economy. Thank you.
So now you're happy, now you're pleased.
Very, very much.
You understand the things?
More than, and I'm careful. I'm careful now.
Okay.
Because what goes on the external issues alone, then we come to domestic issues and so many things they put into place before determining the policy. You would think that it's just something that we did. It was 3 days. I went there for 2 days, and the third day I didn't go.
Why didn't you go?
Because it involves a lot.
Okay.
And I wanted the technocrats to have their own day, having experienced what it is, to leave them to do the rest.
Okay, thank you very much. Let me start off with you, Vish. So we've listened to the governor. Beyond all that he's told us, what else must be done in sustaining the forex gains?
So, Winston, good morning, and good morning, ladies and gentlemen. So I was very happy with what the governor told us this morning, because it aligns very well with our views as PwC in terms of what we think ought to be done. So for us, the exchange rate is just an indicator, and it's a symptom of what's going on in the broader economy and how, as a country, our competitiveness stacks up against others with whom we trade. So I think the key thing the governor said that I heard was about sustaining the strength of the cedi, and that's more difficult than what we've achieved so far. And
sure,
we agree with him absolutely. And so for us, two fundamental things that I'll comment on very briefly. One is, as we benefit from the stronger external flows that we're getting, we must take the opportunity to restructure ourselves internally. I'm talking about the fundamental shifts in the structure of our economy that are necessary, so that when the tide turns, we don't get back into the situation we were in a few years ago. So we are benefiting from higher commodity prices, etc. That definitely will not last forever. But whilst we benefit from that, we must deal with our weaknesses, so that by the time the tide turns, we can have a smoother journey. The second thing I'll comment on briefly is transparency. Because one of the things the governor said is that we must be guided by the data, and that we should not just take information or data from informal sources. And again, we agree with that. But why is that happening? It's because fundamentally there's some mistrust or distrust, I don't know what the right word is, in the system. So we all see the data, but your average business person is not 100% sure whether what they are seeing can be sustained or whether it's actually real. And therefore, I think the path that the governor and his team have taken in terms of being more transparent would encourage them to continue on that trajectory so that as people gain more comfort, that trust can reinforce the rate holding. Thanks, Winston.
Thank you very much, Vish. Let me get to you, Prof. So Vish talks about the fact that we need to restructure internally, something that got you nodding. How do we do that? How do we go about the internal restructuring that you agree is important?
Okay, so I totally agree with Vish that we should restructure the economy because the Bank of Ghana is making a lot of inroads. They are doing their best to make sure that the currency is stabilized. And so they need that kind of coordination with government policies that would make sure the gains are sustained. What are these policies? We all agree that when, for example, inflation is high, it has repercussions for the economy and for the stability of the currency and also for the economy as a whole. So the broader question we should ask is, how do we get inflation low? The central bank is using a restrictive monetary policy to make sure it's mopping up liquidity from the system to do that. But on the government side, I think more has to be done to be able to bring inflation down. The first thing I can think of is for us to improve, let's say, our domestic infrastructure, so that the discrepancy, the large discrepancy between the farm gate price and the market price is actually reduced. That's one thing that we have to look at. The second thing is that we also need to look at the role that the market queens play. As far as inflation is concerned, how do we get the market to be very competitive so that the powers that the market queens possess on the market would come down? One of the things that we can do, growing up, I saw the food distribution company at play, and they were ensuring that the food gets to the market at a cheaper rate. So if you're a market seller, you obviously would make sure that because of competition, you also get your price down. And so that we should get back. We should make sure that we are having that in the system to enhance competition. Another thing which I think maybe Mr. Obeng would fight with me about is that we should also be looking at the role that the parallel markets play. In terms of getting firms the needed forex to carry out their imports. Firms don't want to, or importers usually do not want to use the banks because they think that the rules of the banks are too stringent. And if you are an importer and you go to the bank, you take, let's say, 1 million Ghana cedis, and you say you are using that to import. By the time you get to the port, you need to be able to show that you have taken 1 million Ghana cedis, you've imported worth 1 million Ghana cedis, and your tax would match up to the 1 million Ghana cedis that you have taken, $1 million, sorry, that you have taken. Now, when you come back to the bank for another round of, let's say, forex, the bank would want to inspect that before they give you that round. And so most of these importers like to use the parallel market because they are not, they wouldn't be required to give any documentation afterwards. And once they get to the port, right, they can underdeclare and evade taxes based on that. And so I think we should have a broader conversation about what to do with the taxes of these importers. I mean, we have to have a fine balance between improving revenue mobilization and also giving them, should I say, a fair tax rate that would not push them into evading taxes so that they don't allow the black markets to thrive. We also can think about enhancing the productivity of firms. How do we enhance the productivity of firms? Already, we know that GESEL is doing some guarantees for the firms, and it's allowing access to finance for some of the, let's say, farmers and other firms. But it's important that we improve this kind of system so that they would also have free access to, not free access, but easy access to finance to help improve their productivity. Education is also important. It's important that we educate the farmers for them to use the right kind of tools to enhance their productivity. Just like we do with, should I say, the cash crops. I think we should also try and guarantee prices for those farm crops so that we allow, we have Cocoa Board guaranteeing prices for cash crop. If we want to diversify as an economy, then it means we need to find a way of guaranteeing prices for farmers who are involved in farm crops so that we would also be happy to continue their farming. We will still get our youth to get into the rural areas to do farming because now there are some guaranteed prices.
Great. Joseph Obeng, I was going to go to Fabule, but let me get back to you quickly. Why don't you like using the, banks, the financial institutions? Why do you like to, go into the informal market?
Thank you very much. There are so many reasons why somebody will want to do business with a particular institution.
Including sidestepping the regular taxes for the states.
Yes, I will come to that.
Okay, go ahead.
As I'm speaking, we find it very difficult to access the forests at the banks. They are simply not there. The bankers are here. They should come and talk to it. And that's the more reason why I wanted the governor to be here. We don't have...
His team is here, so don't worry.
Yes. There's no availability of the forest itself. Sometimes this thing may even fuel speculation. That maybe the gains that we are talking about is even maybe artificial. Because if you are not able to access the forest, why do you go there to do the business? Well, you can easily go to the forest bureau or the black market, get your money. The trade facilitation is time, is and cost of doing business, and we factor all this. For duty purposes, we do pay our fair share of duties as we can. But
as you can or as you are expected?
Oh, yes, because the taxes is too much, and that people do not tend to do the right things also. So it has to go together, and that's if you, as a bank, depends on the tax clearance before you give access to the forest, then people may not tend, because what you call under declaration is what other people call the convenience of doing business.
How's that convenience of doing business?
And so, because if you are paying a duty rate of about between 55% to 65%, it means that when you import goods worth of $100,000, you have to go and find between $55,000 to $65,000. It is nowhere in the world can you pay such a duty. So it is the convenience of doing business, and we have to talk to this issue. And this is the reason why people are running to the black market space, because even Bank of Ghana do not know the actual flow of the forest. We do about over 60% of transaction through the black market, and this is a fact. And I've told Bank of Ghana that they can request a bill of lading, parking list, and transaction invoice value for their requirements, rather than going for the accounting aspect of it. That should be left for GRA to do that, the accountability of what we do. But if the Bank of Ghana have to do the accountability purposes, it means that more people are also not going to show up through the mainstream bank. They can do the offshore transactions. Let me tell you, our transactional values that we use derives from the forest bureaus. Whatever, about 70% of our transactional values do not come through the bank rate. So if we are benchmarking the gains that we are talking about, what are we benchmarking with? Is it the bank-to-bank rate, or the Bank of Ghana rate, or the Forest Bureau and the black market rate?
Okay.
And it's about 70% comes from the black market rate.
And
we have to look at this. It's very important.
Finally, and you say you're comfortable with GRA. The Bank of Ghana should allow GRA to do the dealings with you.
Yeah, they do the post-clearance audit, isn't it? Mm-hmm. They come to us, whatever business.
And you are very comfortable with them?
They come. The customs officers, revenue of
are you comfortable with them?
We are very comfortable. They come 6 years. They look through your distance, and then the accountability we are is assured there.
Okay.
We have our accountability there. But if the Bank of Ghana put it as part of its mandate to demand accountability of what we have paid or what we have not paid, then it means that it's not going to fund the free flow, the actual flow of the forest, and we cannot make any better data and formulate policies around.
Okay, let me go to it, but think about it. Why are you comfortable with GRA and not the Bank of Ghana? I'll come back to you on that. But let me get to it because Joseph Obing says they can't get the dollars. You see, they can't get the forex. When they come to the banks, they don't get it. So why don't you have it? I mean, we're told of how, you've given us rates. We've come to you and you don't have it. And then they have to resort to the black market. And then you're blaming them. Why?
Thanks, Evans. So I would like to start off by rehashing something the governor mentioned around the fact that if the narrative around central bank support is seen as an intervention in these times, it's a bit not close to what the true picture is. So if you've seen what we've in the recent past, or in the peak of our crisis as a country, most of the flows that were coming to the commercial banks were redirected to the central bank. So their support, or what they come in to support the markets with, is basically what would have come from the commercial banks. So that avenue, as we speak, exists. So the reason why you're seeing this parallel flow from where we sit as a bank is, to the extent that the documentation that we are required from our regulators to have and to check before we can do any kind of FX transactions with the business units is mandatory. We can't go around that. So if you have those documentation, then you actually have access to the markets that we are talking about and the support you are getting from the central bank. So if you look at us before restructuring, our typical traditional flows have always been gold, cocoa through the central bank, non-traditional exports, oil. We used to have foreign portfolio investors, and we used to have Eurobond issuances. Those two have fallen off. But interestingly, with all the changes we've seen and with the prices of gold and the ramp up in remittances, we've seen those two kind of cover for the shortfall in the Eurobond issuances and our foreign portfolio investors. So if you say there's no forex, if you have the documentation, as we speak, there is forex. There is a conduit to which we can go. There's a modus of operandi that may not necessarily be acceptable to all, but there is an option. The central bank supports the banks currently through 7-day forwards. It used to be 2 days, but that option exists. So to the extent that as a business you are planning or you are looking to do a payment in a week, then that window is open. And we have to date not had issues since, I believe, from end of April up until date. They have regularly supported the market for that side of the business. Where we'd probably be looking at would be if you're looking for a shorter tenor or you don't have documents, then that's a different discussion. Because if you don't have the document, then that channel obviously doesn't become a conduit for you. So that's where the parallel markets kick in. And from that angle, again, another comment the governor made around the remittance flows that we are probably missing and trying to get a hand of how the fintech interplay and how these flows may not necessarily be coming through the formal sector and supporting the parallel market. And so that if we could rope in, could also be a big conduit for the banks. But as we speak, those remittance flows are one of the big flows that could actually help commercial banks and could complement the support coming from the central bank. But in the long run, we believe that this central bank phase is us running through a crisis, and as things get better or currency stabilizes, we expect to see more of the flow seeded to commercial banks so that you can deepen our financial markets, so that we can support the businesses with forwards, with structures that would help them take away their translation risk.
Great. So I have a lot of questions, but I promised that as for today, I was going to give you, the chance to ask your questions. So I've exhausted mine. Well, I can say it that way for now. So if you have any contribution, the Bank of Ghana team is also here. They're taking notes. They're listening to us. I'll get to you. Maybe one or two of you could make a point. But let me just open it up now. If you have a question, please get a microphone to the hand here. And then you tell us the name, the institution you're representing. And then you go ahead and ask your question. Yes.
Hello. My name is Edwin Anientwi, a former Director General of Security Selection Commission, and now the chair of the board. My policy that I wanted Ghanaians and everybody to embrace is what I call the foreign currency chasing the city. Foreign currency chasing the city. And the governor mentioned it. I wish he was here because we share experiences. Most of you have gone travel outside where you can't use dollar to pay your hotel bills. You can't use dollars to pay your hotel bills. And I have experienced that. He mentioned South Africa, yes. He mentioned Kenya, yes. I've experienced it. Ethiopia, yes. South Korea, yes. When you get there late, and at one of them, I got there late with Bank of Ghana officials in South Africa. They have to take our dollars. The bank will take your dollars and parcel it. Give you something that your dollar is with him. Go and sleep. He give you your key. Go and sleep. The next morning, come and take your dollars and go and change into a local currency and pay your bills. Then the foreign currency will be chasing the local currency. Bank of Ghana has seen it. As the governor said, it means he has also experienced it. And I say I have experienced it with them when we travel together. In South Korea, the experience of chasing the local currency, that the local currency goes up because people want it. People want it, so it goes up. In the night when we got there, the rate was there, but the Forest Bureau there has closed. I put my money there. The next morning when I pick my money and I'm going to buy the local currency, the rate has gone up. I don't know why we can't do this. Is there anything that we cannot say? You can't use the dollars here. Let the dollar or your pound or whatever you bring to, go and find cedis for your transaction. Then the foreign exchange will be chasing the cedi and the cedi will be appreciating. Thank you.
Thank you very much, Doc. I see a hand there. Yes, let's get a microphone to him.
Can I speak? My name is Dr. Sedo. I'm a student of Ghana in the adult education class, so you indulge me. And my elder brother just spoke. The governor spoke about data. But the challenge we have is how we interpret data. And he needs to bear with us simply because it is only when the frog dies that you see its full length. And we've been in this country when we've had good things, but after one regime, we're told the opposite. And we can all interpret data differently. And indeed, the last time I went to school, we were given a book that was titled Lying with Statistics. So we can use statistics to say things. So I'm happy that we need to engage. The question that bothers my mind, what is the cost of doing what we are doing? Where do we get the cedi to buy the gold? And at what cost? And I'm asking myself, is it the OMO? Why are we not being told the profitability level? Why are we being told about the revenue we generate from gold? Is it all that money that is Bank of Ghana's money, or is only in a certain margin that is theirs? What is the effect of what we are doing for another main export, that is cocoa? I've listened to the chief executive of Cocoa Board. I call it lamentating. Probably there's some misalignment, and I would need some clarity. Where are we getting the gold from? Is there any correlation between what we are seeing and Galamsey? And what is the cost to us ultimately? That's a question I'm asking. I try to understand on my own what is happening because I'm a student. And I ask myself, foreign exchange, can we use that also to manage our liabilities? Do we have liabilities that we are not paying attention to, that we will need foreign exchange to pay? And when is that due? And when it comes, are we certain we can meet those liabilities? We should not forget that some few months down the line, earlier, we did debt restructuring. We went begging for forgiveness. We went to IMF to ask for $3 billion. If we have so much, can we go begging others for money? I need some help. Then I also ask myself, Dr. Obin, you said you can't get $1 from the banks. But I'm asking myself, so who is buying the dollars? And what are they using it for? Do they use it to generate more dollars for us? BOG, we're told, that has a negative net worth position. In all these processes, can they assure us that they are using this process to get out of the hole they have currently? Thank you very much.
Thank you very much, Dr. Sedo. Okay, so I think I see a hand here.
Thank you very much. I wish the governor was here.
His team is here.
Okay, because he mentioned that with the Forex, we need to have tax incentives. And I would have asked him exactly what he meant by that. Because you see, when we're using SMCD 5, we had exchange losses and exchange gains, which had a very, very serious impact on our businesses. So for example, if it was an unrealized exchange loss, I will add it back for you to pay the tax on it. And the following year, all things being equal, we expect that that unrealized exchange loss, which you've paid the tax on, the following year, you should allow me to take it out because it has not become realized. But the GRA will say no. And then with Act 896, Vish will agree with me. They said, okay, now we don't have exchange losses and we don't have exchange gains. Whether they have become realized or not, they are all deemed to have become realized. And we're good to go. And then the GRA realized that no, they were making or losing revenue. 2 years ago, that law was amended. So we've gone back to XMCD 5. And this is what is killing our businesses. Okay, now, we are in a country, we have thermal oil refinery. I expect the governor to tell me that he is going to use the money or the gains that we made from the gold board or whatever to ensure that we refine our crude oil. For now, what do we get? Surface rental, additional oil, royalties and all of that. Even with the gold board that he mentioned, there is a gold refinery in Ghana. I would have asked him to tell us how many ounces of gold have been refined. And we keep talking about these things. We all know that we export the raw materials in the state that they are. And that is also part of the reason why Ghana is where we are. Thank you.
Thank you very much. Abinama wants to is here. Let's get the microphone to her. And then I'll get to Professor Ebo Texan and the Bank of Ghana team.
Thank you very much, and good morning to everyone. My name is Abnamwa from the Ghana Stock Exchange. As we talk about how to retain a bit more foreign currency in Ghana, I would like to propose to the group considering ownership, Ghanaian ownership in many more of the companies. A few years ago, successfully, MTN came to the market and was required to sell 30% of its shares to Ghanaians using the Ghana Stock Exchange, which means that all the dividends that MTN has now paid, at least 30% is retained with the larger Ghanaian community. And we would love to see this with all the banks, all the insurance companies, all companies that require a license to do something, gold companies, etc. So this is one key area I hope that from these discussions we can take forward. So using the Ghana Stock Exchange, there's a broader ownership stake. My second point I want to discuss really is there are companies set up to process cocoa in Ghana today. All of them are producing under capacity because they don't have access to cocoa beans. Some of them actually even have to import cocoa beans from other countries to process, because Cocoa Board is buying the cocoa beans and has forward sold them abroad. So if we are talking about adding value to the companies that we have, do we still need Cocoa Board? Do I, as a farmer, should I be allowed to grow my cocoa, sell it to the off-takers, and find other avenues to export the extra that I have and attain the best prices that they are? So I think this is one of those key areas we need to talk about. Why must I sell my cocoa only to one institution who determines then the price they want to give me, when there are other producers set up to process at least half of what I produce, and yet I'm not even able to sell to them? So if we want to do this value addition to gold, to cocoa, and some of these cash crops, we really need to look at what we are doing to realize that ambition clearly. Thank you.
Thank you very much, Abna. Which means we can get to Professor Ebo Texan and the Bank of Ghana team. While they make notes and inform the governor, they can at least address some of the questions that have been asked.
Okay, thank you. I think the point raised by Dr. Ben was adequately addressed by Madam Ifuabule.
Sure.
I mean, the fact that the forex rate interbank is being stable should tell you that there is some liquidity, forex liquidity in the banking system. Like she said, if you have the right documentation and an importer and you go through the banks, your demand will go to the auction, and then she goes to get you your forex to do your business. It is those who are speculating on the cedi, who want to hold the currency, that they should work hard not to make sure that they get the currency. Because the gains that we have now will be sustained if we do not allow the speculators to go into the bank and get the forex at the 10 point whatever it is, hold that forex with the expectation that when the cedi falls, they are going to offload it to the market to make those gains. And that is why they need to insist on documentation. So if some of your importers do not want to use documentation, then they are not going to get it from the banks. I mean, so that is a good point she made, and I think you have to educate your members who need a forex to import to get the right documentation to the bank. And I'm sure the central bank has enough to support the auction and to give you whatever you need for imports. Then also the need for us to allow the domestic currency to be chased by the forex, which Dr. Anani made. That is something that we need to work out. And I think that the security agencies should support the central bank in ensuring that we make it a point that every institution in Ghana should use the legal tender. The situation in which educational institutions price their fees in dollars, even though they accept cedis, make it very useful for parents to hoard the forex, even if they are going to pay in cities, so that when it is time for them to pay, they offload the dollars to pay directly to these institutions. And even the airlines that sell tickets in Ghana, they do say, to what extent would the security agencies support the central bank to clamp down on some of these activities? It's a call for everybody, not only the central bank. The central bank can only insist that the right thing is being done. Are we seeing institutions being punished for dollarizing? I mean, these are the sort of things that the country has to take a second look at to address. So that, like he said, when he gets to the hotel, they are aware that there are punitive measures against them if they convert they accept their dollars for whatever payment. So the money is kept, they are asked to go to bed, and the following morning, the money is given to them to send into the bank to get the domestic currency. That is what you should insist. But Dr. Abin will be there. If I walk to his shop and I have dollars to pay for, he will readily accept it. If it sends me to the bank to go and convert that into cedis, it will get all of us to allow the forex to change the cedi. So at times, the behavioral change should come from us as Ghanaians to be very patriotic in the decisions that we make to ensure that we sustain those forex gains. Otherwise, no matter how hard the central bank tries to use policy to sustain the gains, if in our collective decisions, individual decisions, we are making it very difficult for that to happen, it's not going to happen. I mean, so Dr. Obin, we are all part of the solution. So you should not always look at the regulator to sustain the forex. You tell your colleagues, don't accept dollars when people come to your shops. Send them to the banks to exchange for the cedi. So that when we stabilize the currency, it allows your business to also plan, and you know that the currency is stable. You can make a lot of gains from a stable currency. Some of the questions were directed at the governor. So I've taken note of them. I'm going to send them directly to the governor for the central bank to respond. I'm not in a position to speak for the governor because I'm not a governor. Thank you.
Thank you very, very much. Okay. It's just 10 a.m. So we'll take the closing comments from the panelists. Because I see no other hand, which means that we are all okay with all the things that they've said. So let me start off with you, Vish, your closing comments, so we can wrap it all up.
Thank you, Winston. I think that the issue we're grappling with is how to sustain the gains that we've seen in the currency. And listening to the comments around the room, my remarks would be to say that yes, regulation does have its place, but I go back to the comment I made earlier about trust and transparency. So the currency is a store of value. So at the end of the day, what individuals and businesses are trying to do is to ensure that they don't lose value. So to the extent that we have more transparency, and as I said before, I think Bank of Ghana is on the right track in that regard, and it is sustained, and people gain confidence that they will not lose value by holding cedis. I think regulation has its place, but I think there's a happy medium between the two that we can achieve so that the gains can be sustained. And therefore, I take Prof's point about everybody having a role to play. I think to the extent that Bank of Ghana and the fiscal authorities can continue to work on the macroeconomic side of things, and that confidence can be sustained, then the currency or the value of the currency will be sustained by virtue of the trust that the broader business community will have. So Winston, thank you.
Thank you very much. Vish, Ifwa, finally.
So to sum it up, I would say if we look at our country and if we look at it structurally, and the long-term gains, we are looking at, like I think Ejepoma has mentioned, we are looking at structural reforms that basically would speak to maybe broadening our export base, diversifying, adding value, but that is more in the long term. As we work towards that, I think in the short term, a few things have come up that, and as markets, being responsible market players is critical to that. Deepening the market, and I believe that as we see the central bank play a pivotal role now to help, I mean, it's like a cycle. For this market to deepen, they would have to seed some flow to the market again to help develop the market, to support the businesses. So in two forms, long term, we would say the structural changes. In the interim, regulation, responsible market play, and would make a big difference. Thank you.
Thank you very much, Ifwa. Joseph Obin.
Yeah, thank you very much. my brother Professor Texan. The business as it is on the ground, those who do not have documents do not go to the banks at all. They don't go. And they have their own way of doing this transaction. And it's very easy for them, very convenient for them, and they are even more than those who come to the bank. I'm talking about those who have legitimate documents, who go to the bank now and do not have access to the forest. The onus lies on Bank of Ghana to find out the reason from the banks. We are not getting the access to the forest. Simply, they tell you the forest is unavailable. And so Bank of Ghana should take serious. And then probably they have to track demand of the forest, especially through the banks. Is it that we have bigger entities somewhere who are taking the chunk from the banks and leaving us behind, or what? We have to track the demand. It's very important that whatever forest, the injections, the interventions Bank of Ghana is making, we have to track the demand of same. Because there are some people, especially most of the foreign companies, who buy the China malls, China towns, and all that, who buy the chunk of this forest, and it is hurting us.
You know that for a fact?
Just because they buy the chunk of it. So we have to find out why there's maybe a counter flight in a way. The demand of this forest should be tracked. It should be tracked. Thank you very much.
Thank you very much. Prof.
I completely agree that the behavioral changes are very necessary to make sure that the forex chases the city. But to add to what all the other members have said, for citizens to also have faith in the city, the structures should be fixed. So I think that the government should seize the opportunity, as Bank of Ghana is trying to, should I say, meet the demands of those who are demanding forex on the market, right? The government should also seize the opportunity to put in the right structures to make sure that we sustain the gains that we are making, so that citizens would also have confidence in the city and continue using the city.
Thank you very much, Professor Ijapoma Jakadako. Thank you very much, Joseph Obeng. Thank you very much, Ifabuli. And of course, thank you also, Vish Eshiagbo. And we're grateful to Graphic Business, Stanbic Bank, and of course, Labadi Beach Hotel for making this successful. We're live on the Joy News channel and on Joy 99.7 FM. My name is Winston Amwa. Thank you very, very much. Okay, it means we can take a picture. And the MD of Graphic, and also Musa Abdallah. Please join us here. The team from Bank of Ghana, you can join us. Abna, please don't go. Join us also. We can take a photograph here. And I see Dr. Edouan Anientri. Yes, you could also join us. Let's take a picture. And then we can wrap it all up and go back to our business.